you're only as good as your next deal, or you're only as good as how you see the market, and are you seeing the market correctly? Because the beautiful thing and the horrible thing about investing is you have a track record. So it's very transparent of how smart you might be, or how you see the market and how you can get ahead of other people. And yeah, we have a great track record. We're very successful in that. But what keeps me up at night is saying, am I making the right decision today? Because just because Caprock has been successful for 15 years, we could be gone tomorrow. We could be literally like, oh, I made poor investment choices, and the investor going to say, what were you doing? So every single investment decision is so important, especially in a turbulent market like this. So I don't think there's anything that says, oh, how does Caprock made it or anything like that. It is, we have so much more in front of us. And in order to hit our full potential, each of our team members has to be working incredibly hard, especially in a market downturn, to separate ourselves from our competition.
Jon Pharris.
Hey, Conrad. Thanks for having me.
How are you doing today, bud?
I'm doing great.
Thanks for making the journey all the way over from Cowtown over here today.
That's right. Fort Worth. Now, back on over on Dallas.
Yeah, man. We've known each other for a little while. Actually, it was probably a little over a year or so ago, I think, when I met you. I was actually at breakfast with the godfather of our business, Mr. Jack Fraker. And you came up to Jack and shook his hand like everybody should if you're in industrial real estate. And then we shook hands and then grabbed lunch pretty quickly thereafter.
Yeah, that seems about exactly right. Because I've been here.
When did you move to DFW?
Coming up on 3 years now.
Wow.
So I moved out of California, moved here.
Yeah.
One of the COVID transplants, and
I had lunch today with another Cali COVID transplant.
Yeah, they're still happening.
They're still happening. I know.
There's 400 people a day moving to DFW, right?
I know.
And so I moved in summer, and now we're coming up on 3 years.
Yeah.
And it's been a great move. My family loves it. I love it.
Yeah.
It's been great moving out to
freedom's pretty good thing, isn't it?
Freedom is a great thing.
Yeah,
exactly. Like-minded people.
Yes.
Great business environment.
Yes.
It's been a great move.
That's awesome. Yeah. So we've got to know each other a lot over the last few years, been chasing some deals and putting a lot of stuff in front of you. And we're going to dive into all about Caprock and what you guys have been up to and y'all's history and all the great things that you guys do, not only in the real estate world, but even outside, helping other organizations and charities and such. But, I'd love to let the audience learn a little bit more about Jon, kind of your upbringing, kind of where you came from, and how all those things shaped you to be the stud that you are today. Far
from being a stud, but still trying to make a buck just like everybody else.
I had to throw that out there. That's all on me. But tell us a little bit about, you, Jon.
Yeah. So I was born and raised in Southern California.
Yeah.
In Orange County, more specifically.
Yes.
And
nice little part of the world.
It is. It was great. And before moving out here, I was in Dana Point, but our offices are headquartered in Newport. We have offices in Phoenix, and we have offices in Dallas-Fort Worth area.
Yeah.
But my background was always Orange County.
Yeah.
So I was
born
and raised
the
there.
OC.
A little surfer kid, went to Newport Harbor High School.
Yeah.
And other than moving out here, I've always lived in Southern California.
Yeah.
And made the jump, like we said, 3 years ago. But when I was growing up, it was a very different kind of environment. Wanted to go to the beach, wanted to go surfing, and I was a water polo player.
Okay.
And that's probably the thing that doesn't translate as well in the prairie land of Texas is water polo. In Southern California, everybody gets it.
Right.
There's a lot of water polo. It's one of the most competitive spots in the country. In fact, almost, I think, every single Olympian for water polo was either born in California or went to a California school.
I did not know that.
And then being out here, there's There's not
It's
really
virtually, it's nothing.
almost nothing.
Yeah.
And so that was actually a lot of what I did when I was younger. So competition is really important to me, and having people at the company that were college athletes and that have a competitive mindset. Because I think that really separates and allows you to take it up another notch when you need to. And it also teaches you a lot of time management skills.
Yeah.
So I was on the junior national team for water polo from the time I was like 14, 15. And I was captain of the junior national team when I was in my teens.
Awesome.
Yeah. So I traveled all around the world playing water polo. I mean, Asia, South America, Cuba for the junior Pan Am games. And I was captain of that. And we won the gold medal in 98.
Now, what actually happens if you touch the bottom in water polo? Are you out of the game?
No, it's so you basically...
I've always heard this rumor, like, you can't touch the bottom of the pool, right? That's about all I know about water polo.
Pretty much the reason why you can't is because for international competition, it has to be a minimum of 2 meters, and that's about 6 feet, 7 inches. Okay. So generally speaking, you can never touch the bottom just because it's so deep. Gotcha. But then if you're playing in an antiquated pool and it's a shallow pool for whatever reason, if you touch the bottom, it's essentially a turnover, unless you're the goalie.
Okay.
But for all practical purposes, you never ever touch the bottom because the depth of the pool is so great.
Interesting.
Yeah.
So when you were a kid, like making it to the Olympics, was that kind of like your passion and goal? Like, did you want to take water polo was that kind of?
Yeah, once upon a time. I mean, when I was a teenager, there was a certain path that I could have gone down because I was playing. And a lot of things have to go right just for it. That to happen. You can't get injured. You have to, your team that you're growing up with has to be in a certain caliber and all those sorts of things. But eventually I looked at it when I was 17, 18, preparing for university, for college, saying, what path do you want to go down? Because at least for water polo, there's only a few schools that feed into the Olympic programs. And even if I went to one of those schools, doesn't mean at all that I would be on the Olympic path. I just made a decision when I was in the very end of high school to say, water polo is a great sport. It gave me a lot of fantastic friends and life experiences, but I wanted to take it to the best school I could get into, which was Princeton. And so I used that as an opportunity to get into a great school.
Incredible.
And realize at some point, sports careers end for everybody, whether you're a baseball player, a basketball player, a minor sport like water polo. At some point, it's going to end. And I knew that I wanted to go into the business world. So there was just a natural succession of saying, I'm really pretty good at water polo, and who knows what could have happened. But I made the conscious decision to pivot and use college as an opportunity to prepare for what's in the future.
If you get into Princeton, that's probably a decent path, right?
It worked out all right.
It's okay.
It's a great school.
Yeah.
It's a great school.
Not too shabby. Yeah. Do you still swim?
I think I would drown. Yeah. I'm more like a bowling ball these days than I am.
Well, I know, but do you enjoy swim? Like, do you swim laps at the gym or not?
No, I really don't.
I
don't really do that much. I mean, I was playing water polo for so long.
Yeah.
At some point, you just
probably just like I've had enough.
I'm fine.
Yeah. Well, I don't go out kicking field goals anymore either.
Yeah,
so,
exactly.
Yeah, no,
you're not gonna get out there and go tackle somebody and do all that. Yeah.
I hear you. Who was the staying in your kind of childhood years? Who was the most impactful person in your life growing up?
Well, I'd say I have a great family. And that whole ecosystem, my parents, my brother, my sister, we're all still really close. And I would say just growing up in a great family like that, where everybody cared for each other and looked after each other, really made an impact also on how I want to be with my family. So I have 4 kids, and they're.
Are you done now?
I'm done. 2 boys, 2 girls. I'm actually preparing to launch somebody here next year into college.
Wow.
But it's I think that's been the most impactful component of how you want to define success. It's not, there's so many other realms besides just business side of things.
Yeah. So going back to business, you start thinking about going to Princeton. Did you have a passion for something? Like growing up in school, did you love math? Did you love science, history? I mean, what was kind of the genesis of kind of going down the path you wanted?
I'm a pretty independent person. So I always thought that I would have a company and start a company.
Yeah.
And when I was growing up, I either wanted to do real estate or Wall Street.
Okay.
And so one summer after or in Princeton, one summer going into my junior year, I worked at Merrill Lynch when it still existed as an intern. Yeah. And I just realized that wasn't for me. I was not a Wall Street type person. And I didn't.
Was that in New York? Was that in New York City?
No, I was in LA. Okay. I was playing water polo, so I had to be in Southern California.
Yeah.
And I was traveling and doing a bunch of things. Sure. But it was very helpful because I only wanted to do one or two things my entire life, which was Wall Street or real estate. And I'm like, well, you take out one of those because I realized I didn't want to go to Wall Street. So then I was able to focus on real estate, and that became the de facto spot for me. So then going into my upperclassmen years at Princeton, I knew I was going to do real estate. So then I thought, hey, how do I have a company when I'm this magical age of 35, which is an age I thought of when I was 20. I'm like, gosh, at 35, that's old. And now I'm in my 40s. I'm like, 35 is super young. Very, very young. And I knew that I wanted to have a company that looked a lot like Caprock. And this is back when I was 20 years old and wanted to have a company that bought buildings and renovated them and also bought land and built industrial buildings. Sure. And the only thing I ever focused on was industrial. And I never cared about mixed use or residential or office. And it was way before industrial was the darling child of investing. Right. But that was the only spot I was focused on. Yeah. And so I basically charted a career path and said, okay, my personality is much more extroverted. And there's really one of two ways in my mind to you get into the industry. One is through the brokerage channel. Yeah. And the other one is through the finance channel. Sure. And I'm great with numbers, but my personality is like, I want to be out talking to people. I want to be banging the streets and knocking on doors. So I started as a broker at Lee & Associates in Southern California, selling and leasing right around Orange County. Yeah. And I really liked doing that. But then I realized, well, I need to continue on these steps that I had. So I went back to USC and got my master's in real estate development at the MRED program, which is a great program. Yeah. Then I worked at a value add company. And I got hired away by a developer. And while I was at the developer, I was a development manager for the Inland Empire. So I sourced properties, I entitled properties, I built properties, all for industrial. And then the world stopped in 2008, 2009 in the GFC. And that's the opportunity to start Caprock Partners. So instead of that magical age of 35, I was 29. And people thought it was like, oh, that must have been so great. You had such a perfect opportunity to start. I'm like, well, I'm 29 years old. I have 2 kids and I'm broke. Like, that's not a great time to start anything. Right? No. But that's the opportunity that presented itself.
Wow. Yeah. 29. That's pretty impressive, man. Yeah. I mean, that's young.
It was, well, you're young and naive and you didn't know what you didn't know. And, there's 3 owners of Caprock Partners. And my dad is the chairman and he provided seed capital right at the very beginning for our first couple of deals and a lot of strategic insight and helping form the company. But the day-to-day has been Pat Daniels, my partner, and I from day one. And at the really early stages, we knew we wanted to have scale and we wanted to be doing exactly what we're doing now. But when we first started, I was sitting in a cube and I was dialing for dollars. I was calling banks. I was calling for non-performing loans. I'd say to Bank XYZ, hey, I know you have the loan on a specific building. I want to buy that loan. And sometimes they didn't even realize they had that loan. And other times they were like, oh, I know Caprock Partners. Yeah, I've heard a lot about you. Like, there is zero chance. I am sitting in the cube. I started the company like last month. You have no idea who we are.
I remember when I started Paladin Partners and I was still cold calling people and people were like, oh yeah, I've heard about and I think that's one of the beautiful things of having partners.
Yes.
As the second part of your name is because there's so many corporations that use that. And I swear it was the same deal.
Completely
we got the same
doors.
Deal. Yeah. It opened doors. Yeah, I know.
And then once the doors open, it's up to you to.
That's right. You got to go
make the most of that opportunity.
That's right. Go make the most of it.
It is funny, like Paladin Partners. You have no idea. The other side has no idea who you are. They think they do. Or Caprock Partners, like, Oak Tree, BlackRock, Caprock. Right. Like, all the same. Right?
All the same. Yes, it's funny. Exactly. Caprock's such a great name did you know for Texas as well? Do you know?
I do know now. Yeah,
now
absolutely.
You probably know a little bit, so there's like a Caprock Canyon kind of out in West Texas. There used to be a huge telecom company when I first moved to Dallas called Caprock Communications. They sold for $1 gazillion way back in the day. But Caprock's just like a really good name for Texas, so it fits so well. And I know
it was destiny that I was going to be out here.
It was destiny that you were going to get out here. Yeah. Well, that's fascinating, man. Is there, why industrial? How did you gravitate towards that?
I am a simple guy. I mean, really, when we're looking at real estate, the only thing that interested me was industrial. And growing up in Southern California, it is arguably one of the number one industrial markets.
Yep.
Certainly, it's always a top 5
Yep.
industrial market. So just driving around, I'm always looking at industrial buildings, from the time I was 15, 16 years old.
Sure.
And my personality, to me, office, even in the heyday before the downturn, office people have a certain personality. That's not my personality. I gravitate more towards the industrial sector and people who seem to be more
a little more down to earth.
Yeah. And so it's been a good fit.
Yeah. That's awesome.
And I remember when I was going through the MRED program, this is like 2005 timeframe, right?
Okay.
Obviously before the GFC.
Sure.
And it was right when mixed use was really starting to take off, at least in Southern California.
Sure.
And everybody wanted to do residential. Everybody wanted to do mixed use. Everyone wanted to do like urban stuff.
Yeah.
And I was saying, no, I'm going to drive like an hour and a half away to the Inland Empire.
Yeah, that's right.
And buy land from
these rectangle boxes.
Exactly.
Right.
And I'm glad I did it.
Yeah. Well, let's dive in further into Caprock. I mean, so you started at 29 years old.
Yes.
Tell me about those early years, man, and like how you made ends meet and how you put together deals. I just think stuff like that is fascinating for young people that are listening, of like the entrepreneurial journey. Like, other than long hours, like, tell me about those first few years, man.
Well, now we're celebrating our 15-year anniversary this summer.
Yeah.
So, from where we are today, which is just about $3 billion in gross assets under management and about 55 people, 3 offices, raised 8 different funds, and we currently invest in 3 strategies. One is a value add strategy.
Yep.
One is a development strategy, and the other one's opportunistic.
Yep.
And we have investors like sovereign wealth funds and life insurance companies and university endowments and domestic pension funds and other institutional investors. So, that's what we are today. But you start 15 years ago, and like I said, it was just
tell me about the first
Pat
building
Daniels
you bought.
Daniels and I sitting in offices, and I was in a cube dialing for dollars to banks, and it was the GFC, and so the world was, nothing was transacting. It was even less transaction volume than there was today.
Yep.
And we created a database saying these are the transactions that occurred at market peak, and here are the loan profiles. And then we started separating them from institutional ownerships and non-institutional ownerships.
Yep.
Then we started separating them from major banks and local banks. And then we started creating kind of a hit list of assets throughout California, all secured by industrial and all non-performing loans. And there'd be up in Northern California and Southern California.
Yep.
And our very first deal was in Chino, and we bought a non-performing loan secured by an industrial building. And it's funny because we're building millions and millions of square feet, and we have about 33 million square feet that we've acquired, developed, or entitled since inception. Our first deal was 10,000 square feet. And it was a non-performing loan, and we were just trying to scrape together the capital in order to buy this deal that was around, it's 15 years ago, so these numbers aren't exact, but it was around 35% of original loan value. Yeah. You had the GFC, I think, was cut in half, then we bought a discount.
Yeah.
And we were successful. We bought the non-performing loan, we took foreclosure, and like, great, now we have a 10,000 square foot asset. I still remember the address. And what did we have to do? Well, the former owner user trashed the building. And so on the weekend, Pat Daniels and myself and Pat's son, who was like 6th grade at the time or whatever, we were cleaning out the warehouse. We had brooms, and we were pushing things out, and we were taking things to the dump, and we were literally doing it entirely ourselves, which is a story that people don't really know. Like, that's how we started, but you're entrepreneurial, trying to get things going. You have a limited amount of capital. At the time, again, I'm 29 years old and really essentially broke. So every penny means a lot. And so in order to create a successful venture, you do whatever it takes.
That's right.
And roll up your sleeves literally and get in the warehouse with the broom, with paint, and clean it out.
Wow. How much downtime till you got leased?
We actually sold it to an owner user.
Did you?
Yeah, we sold it. We flipped it to an owner user, and it was successful. And then put a string of those deals together, and that's.
But that's kind of how you started. Little small buildings. Yeah. That just kind of slowly.
Our second building was 50,000 square feet.
Yep.
Also happened to be in the Inland Empire, and it was a non-performing loan. Yep. And then we were doing a lot of those sub 100,000 square feet because in our viewpoint, we were targeting SBA loans, Small Business Administration, where basically the first 50% was wiped out, and then you'd buy the 40% at a discount. And that's how you were able to create some equity. Yeah. And so almost all of our first buildings were more or less than 100,000 square feet. Yeah. All former owner occupants, a lot of them, but not all of them were SBA financing. Okay. And then for the first about 2.5 years of Caprock, the only thing we did was distressed debt. And the only thing we did was buy non-performing loans. Yep. And that's where the market was. And we were just trying to go, where's the opportunity? At the time, we didn't know a lot about buying paper and what that meant and how you protect yourself and hedge your risks and all those sorts of things. And now I don't think it's going the same direction as far as the severity of it, but there are non-performing loans. And those are happening right now.
In the office sector.
In the office. Yeah. And certain areas of industrial, not necessarily in DFW, but in certain markets, people got ahead of themselves. Yeah. And so we're putting back the old playbook and saying, okay, who are our consultants? Who are our attorneys? Let's make sure we understand the new, the updated regulations in each of our different states that we operate in. Because there's a possibility we'll be buying non-performing loans again and reliving history.
It's funny how history always seems to repeat itself, doesn't it, John?
Yeah, it certainly rhymes.
So, dude, that's incredible. Growing from 10,000 to 50 to now 33 million square feet done.
In cumulative, yeah, exactly. From our first 10,000 square feet in Chino to
that's awesome.
Just leased more than 1 million square foot building in the Inland Empire.
And you guys have a huge name out in California. Now you're trying to do the same thing in Phoenix, DFW. You moved out here, like you mentioned earlier in the show, a few years ago, and recently acquired first asset, right? The Mesquite building.
A first solely owned asset by Caprock.
Yeah, so Texas. You are officially have planted the flag.
Exactly. We planted a flag. We have a JV partner as well on other assets, but our first solely owned was last month. Yeah. It's a great asset. We're right on 635. It was 100% leased when we acquired it. And there's a clear path forward to increase NOI. And
for sure.
We love the asset.
No, I think that's a great buy. I was excited for that opportunity for you guys. And then you've obviously hired a couple young bucks that have spent some time in the industrial sector here locally, Taylor and then Charlie Doherty. They're helping you immensely.
Yeah, they've been great groups. For us, industrial and all real estate is really a relationship-driven aspect. And one of the things that Caprock's been able to do is always have boots on the ground. And that's led to just being able to cultivate relationships just like this, right? Where we're having conversations. 100%. And I'm a transplant. I moved not even 3 years ago. Right. And in Southern California, which is where I was born and raised, I'm still doing deals with people I went to high school with. Right? That's just the innate nature of industrial real estate, which is why I love industrial real estate. Sure. And obviously, I was never going to have that in Dallas, and I shouldn't be leading acquisitions in the DFW or Houston region. I'm the outsider. I'll always be a little bit of the outsider, even though this is now my home and love it in DFW. I'm not moving back.
You fit the Texas profile pretty good, though, bud.
I got horses. Yeah. We got a stable. Yeah. We're definitely there.
You're a nice guy. Yeah. You fit the profile.
Yeah. Well, the people out here are great. But that's why we wanted to hire Taylor Starnes. Yeah. Just to really have somebody who is embedded in the network here and the people here and the relationships here. And born and raised in Texas and went to UT and just that. That's how we want to view how we create Caprock, right? And replicate hopefully our success in California. And the other thing that I love about Texas is you mentioned the people, but the competition is top notch here. They're usually very high quality people. They're usually very good competitors.
Yeah.
And there's a unique camaraderie that is different here in a good way in Texas and
I agree.
specifically in Dallas than there is in Southern California.
Yeah.
And I have lots of great friends in Southern California. Obviously,
Sure.
my whole life was there. But that is a unique aspect of Texas that I wasn't expecting.
I think people are more willing to share information here and cheer on everyone. You know, it's like, hey, if you make a great deal, we're happy for you. Yeah, it sucks. We might have lost, you know, I mean, but I mean, I think I
totally agree.
There's just this deal of like, hey, if you're doing well, everybody's, you know, the next guy's doing well as well. And we can all lift each other up simultaneously. And bro, I agree. Like, I think and I don't know where it really all comes from, but I think, you know, having Trammell Crow originate here, having the Staubach Company originate here, people that were just really trailblazers in commercial real estate, I just think bred such a great environment and good people. And then I think you layer on the Texas, you know, treat your friend, you know, treat everyone like you'd like to be treated, you know, type deal. I think you layer that on and it just creates an unbelievable community, you know, and then you even dig in deeper into even other industries, right? Like people are just so willing to like help here. It's crazy.
It is really unique. So I would say that, especially when I first moved here, the mindset of Texans is very different than the mindset of Californians today. And what I mean by that is I felt like here in Texas, DFW specifically, it was always like, well, let's go figure it out. Yeah, why not? Let's go ahead and do that. Yeah, we'll help you out, whether that's in introductions or it's, let's go figure out how to build that project, or let's go ahead and how to renovate something else. Yeah. And in California, there's such a different attitude. And it's and a lot of Western states, I don't just necessarily need to say California, but it is a very different approach where there's a lot more reasons to say no, versus in Texas, there's a lot more reasons that everybody, the business culture, the personality of the people say, yeah, we can figure that out. Let's go. Let's think big. Let's go do this.
Right. I think you're onto something. I think you're right that it's like we can accomplish anything here. You know, if you put your mind to anything, like we can get it done. And maybe a lot of that stems from less government here, right? Less regulations. I mean, exactly if you're handcuffed in California on permitting and entitling and all those things that you got to go through, it's hard.
It's hard. It is hard. Well, I remember driving with my father, who's a great guy in his 70s and was very successful businessman, and we were driving around the DFW area. This was maybe a year and a half ago.
Yeah.
And like his mind was blown away by how many cranes were in the air in so many different cities, not just in the downtowns. He's like, this is what I remember growing up as when I was in California, and Orange County and Southern California in general was exploding. And there was so much more opportunity in Southern California.
Right.
Like that's kind of what's happening right now in Texas, except that in Texas, there's such a long runway that's in front, right? With the business climate, the number of people who are moving here, the regional transportation hubs, the nearshoring, onshoring, and benefits of Mexico, and just again, the personality and the profile of people who want to be in Texas. There's so much
runway here.
Here. I mean, I believe it so much. I moved my entire family here, a family of 6, like 4 kids, my wife and I, and this is home, and we're never going back.
Right. Well, and when you looked at it, I'm sure you were like, this isn't a 5-year plan. You know, I'm doing this really for my kids.
Exactly right. You're looking at it from not just a business perspective, which you've already talked about, but where do you think your own kids are going to end up, where the culture and the values, and you never know where that's going to be, but
for sure,
you're looking out generations and a long-term vision, which is what I tend to have, is longer term plays and be here for the long haul.
That's
I'm very happy about it.
And hey, from July to August, we're a 3-hour plane ride back to lovely SoCal, right?
Or the mountains.
Right? I tell people this all the time. Like, listen, DFW is not the prettiest place in the world. There's no 2 ways around that. We don't have beaches. We don't have mountains, all this stuff. But we do have a great airport. And we can be anywhere in 3 hours in North America. And that's kind of nice.
Yeah.
You know?
Well, it's like we said before we were talking about the podcast starting. I've been on a plane pretty much every single week except from middle of January till now.
Yeah.
That included spring break, but
Yeah.
I travel for deals. I travel for investors. I travel for
Yep.
lots of different reasons, and I'm literally in the air. And an unexpected benefit of being in Texas is you can get anywhere in 2.5 hours.
That's right.
It's incredible.
Yeah, I mean, I can't imagine having to make that LA to New York 6-hour trip all the time. Like that would wear my ass out.
Yeah.
I'm not, after about 2 hours, 2-3 hours on a plane, like I'm ready to get off.
Yeah.
Like I'm just, I'm an antsy guy.
Exactly.
I'm ready to get off there. Yeah. Incredible. I love hearing that whole story, John, of from the beginnings to where we sit today. Let's talk about today. I mean, where do you see, the debt and equity markets right now? I mean, how hard are things out there? I mean, you're seeing it all the time. You're underwriting deals. You're looking for loans. I'm sure you're probably even refining stuff maybe on some of your portfolio. I mean, we all have seen the challenges since, the rate hikes in 22. I mean, where do you see it today?
I don't think the debt markets are nearly as challenged today when we're talking in beginning of May, end of April, as they were at the GFC. So in the GFC, with the failure of Bear Stearns and Lehman Brothers and all the other things that led to, the entire capital markets were completely frozen, completely illiquid, and the debt funds didn't exist. So today, you do have capital markets issues, you do have higher rates, you do probably going to be there for longer, which is what we've thought for, Caprock has thought for a long time. But there's still liquidity in the marketplace, albeit a lot less than there used to be.
Sure.
But compared to the GFC, there's this whole other capital stack, which is the debt funds. And the debt funds were coming in way before the illiquidity that exists today. But because of the debt funds of the KKRs and the Carlyles and the PIMCOs and all the groups that pretty much everybody knows, that has provided more of a lifeline to commercial real estate, probably less so for office. But because of the debt funds, there's still transactions occurring. Yeah, the cost of borrowing is significantly higher than it used to be. But that's still that's putting a floor in terms of value. Whereas 15 years ago in the GFC, there was no floor for value because there was no debt. And if half of our cap stack or 65% of our cap stack is debt and that no longer existed, it would have almost no bottom to where pricing could go. Today, it's a very known floor to where pricing is going. And then what you have to do is extrapolate where do you anticipate cap rates are going to be when you sell the asset in 2, 4, 7, 10 years. But at least where the debt is going to come in because there's such a wall of capital on the debt fund side. And we still see the banks being out of the market for all of 2025 and probably tipping themselves back in slowly in 2026. The major issue with banks is that they have to deal with their office loans.
That's right.
And nobody knows where office values are.
That's right.
Other than going down. But until there's more of a stability in the office sector, it means I think banks are just really going to be on the sidelines. Plus, they have so much scrutiny, especially mid-sized banks by the federal regulators, that it's going to be so challenging for them. Like, why would they make a commercial real estate loan? Why would they make a loan to industrial? So that means that pretty much almost the sole spot for debt is those debt funds, and they are all pricing in the SOFR 275 to 350 range, depending on the quality of the asset, the age of the asset, the rent roll, all those sorts of variables. And then there's still construction financing that's out there, but that all is SOFR 400. And when you add that up, you're talking about debt that's maybe 9.5 today for new construction. So that's why there hasn't been any new construction. And then for industrial, really anywhere, right? This is the least amount of starts in DFW. It's the least amount of starts in California. And I put on the contrarian hat and say, that's actually a really good thing because it's going to allow the industrial market to self-correct itself. And then all of a sudden, in 18 months, we're going to be talking about certain markets and certain size sectors in those certain markets that have rent spikes. Because nothing else is being built. And I'm not advocating for anything to be built because I think we have, as a as an industry in pretty much every market, we have overhang of supply that needs to get absorbed.
Sure.
And that's going to take 12 to 24 months.
Yep.
But then after that, with no new starts, you're going to start seeing an imbalance in favor of developers. And not a lot of people are talking about that. And it's not here yet. But if we're looking out and saying, where do I want to be strategically at Caprock? Well, there's certain land bank areas that we've identified in DFW. Yeah. There's certain other markets that we've identified. We're like, this is where we want to have some toeholds so that if we start construction in the second half of 2025, first half of 2026, I think we're going to be in a great spot.
I think you're 100% accurate. You know, I think if you're starting construction somewhere in 25 to 26, you're going to be timing the market right. Interest rates are going to be going back down. Cap rates are going to be going back down. You're going to start seeing rental spikes again. You know, and we're going to be in a good place. But we have some stuff we've got to get through the next couple, and 12 to 24 months.
The thing that I'm not completely sure about of what you said is where the cap rates are going to be. I definitely think that the artificial cap rates of that 3.5% from
I don't think we're ever going to get back there.
And we shouldn't.
Probably not in our lifetime.
Yeah, and
we probably should.
You shouldn't, right?
That's
There's a risk factor that everybody ignored. Right? People were, and developers were becoming millionaires because they had a site plan on a piece of paper on land that they didn't even yet own, and they sold it to a third party and financial planner, right?
It was wild.
And all of a sudden they became a millionaire. They never even owned the dirt. They just flipped everything.
That's right.
That didn't make any sense. Yeah. So we're not going back to those days. But our view is that cap rates are going to be higher. When I started doing development in 2006 or so, give or take a year on either side of that, Southern California cap rates were a 6 cap, and nobody even thought anything of it. Like in certain cases, they were higher than a 6 cap, right?
Right.
And I'm not saying we're going back to a 6 cap world, but I think that a lot of the younger people, and again, I'm 44. They never even realized that things could have a 5 handle or a 6 handle from a cap rate perspective, because all they knew was 3 handles and 4 handles.
Right.
And I'm like, well, when I started, there would be something wrong if it was anything sub 6 cap.
Sure.
And so I think that the mindset has to shift a little bit.
Yeah.
And I also don't think rental rate growth is going to be nearly as robust as it was over the last 5 years.
Don't disagree.
Right. There's a chart that we have in our pitch deck, and it says like 2016 Inland Empire rates and 2022 before any kind of change in rental rates. And I don't have the exact number, but it was something like 250% rental rate growth in the Inland Empire. And then there's another one for LA and Orange County and Seattle and every major market on the Western US. We're not going back to 200% rental rate growth in a span of like 6 to 8 years.
Right.
That's not healthy. Right.
But agreed. And what we're also seeing is these occupiers are starting to push back a little bit, right? I mean, balance sheet, the CFO is the best friend of the guys in today's times at all these corporations, right? Or he's the guy kind of in charge. Exactly. And cost of doing business has all gone up. Inflation's gone up. Rental rates have gone up. And a lot of guys are just kind of sitting tight because they can't go take down, another 200, 500,000 square feet, because the rates have now doubled, tripled, quadrupled, whatever the case may be, wherever you might be.
Well, if you were in, not to keep on using Southern California, but if you were in the South Bay, which is the area closest to the ports of LA and Long Beach, there was land trading at $250 per land square foot, vacant buildings, or a building that would have to be torn down. The land value was $250. And so then your nets on an annual basis are like $8. And so you're thinking about, how does that pencil anymore, right?
Yeah.
Values of land in Southern California have definitely retrenched correctly, but the groups that paid $200, $250 per land square foot, and all of a sudden you have these, they didn't think perhaps all the way through, and now all of a sudden you have nets that used to be the actual rent, right? Now it's $8 for triple net expenses, where it used to be $8 on an annual basis for rent. Yeah. So it's a wild change.
Yeah, we're in for some wild times over the next 12 to 24 months. But, I think honestly, like, we need to get these office buildings, these banks, this crap needs to get off the books. They've been kicking the can down the street,
Mm-hmm.
And I just think we've got to get that flushed out so that we get to what I would say is bottom, and we start working our way out. This one's just taken so long to play out compared to the GFC, which like in 60 days, like it was gone.
Yeah. Well,
I
think that every time at the early 90s, right, the RTC days where a lot of investors and developers either lost a lot of money or made a lot of money, depending on what side of the coin you're on. And then the GFC, there was a lot more liquidity flushed into by the federal banking system.
Yeah.
This time it's different because everyone's smarter from the early 90s. They don't want to create the RTC, and they don't want to. The federal government doesn't want to be
110% financing anymore.
Yeah, and the government realized that if they could inject some liquidity, and then they could drag things along, and the banks wouldn't lose as much capital.
Yeah.
And then now in the GFC, it's different because you had higher interest rates at the beginning of the GFC. They went to zero.
Yeah.
This time you started at zero and they're going higher.
Yeah.
So there's going to be different ramifications to it. But I think that we're still in the earlier stages of this. I don't think we're, in the sixth inning of this. I think we're more in like the first or second inning still.
Ooh.
And I think there's going to be more bank failures this year. I think there's going to be more repercussions to the higher for longer.
Yeah.
I think there's a possibility that inflation, and I've been saying this for a while, is going to stay around. And I think at the beginning of the year, groups were anticipating 150 to 200 basis point of cuts. It didn't make any sense to me because inflation was still high.
That's right.
And if I'm on the Fed board, which obviously I'm not, the last thing I'd want to do is be known as the Fed board that let inflation get away. Right.
Yeah,
so inherently by human nature, they're going to err on the conservative side because they don't want to have what happened in the early 80s and high inflation. So they're going to just stay higher for longer for now. And what if the next one is a rate hike instead of a rate cut? Right?
That would do some interesting things on going back to Wall Street, wouldn't it?
It would.
It would. But I think you're right in terms of, all these banks and debt maturities. I had Chris Roach, he's the CEO of BBG, which is a big valuation company based here in Dallas. And he was on the pod a couple weeks ago in here, and he said this first quarter of this year, and I don't remember the exact stat, but it'll be on the podcast. But the amount of valuations they did on distressed real estate went up like 150% or something like that. All of a sudden they just got hit with a ton of and again, almost all this is in the office sector, a little bit multifamily, but mainly all office. So it's coming.
But it just takes a little bit longer than people want because sometimes investors will make the initial capital call. Sometimes they'll make a second one.
Yeah.
Sometimes the bank will give a 1-year extension. I mean, there's lots of different circumstances why it takes longer to work its way through the system. Yeah. So I think that we're still in the earlier stages of the pain, and we really haven't seen any bank failures other than the first three. Then last week, because of when we're recording this, last week there was another one, but I think there's a higher probability that there'll be more distress in the banking sector. And that there'll be more bank failures.
Agreed. Those that are over levered, and especially in that office class, that's going to get flushed out over the next 6 to 12 months, I think. Mm-hmm. And there's going to be more failures in that sector. And it's just weird because I also think there's just, at the end of the day, all these funds, all these capital sources, these guys have been twiddling their thumbs now for almost 2 years, man. Yeah. And like people want to do deals. And so it's interesting, it's going to be an interesting dynamic to see how things play out over the next couple of years in the whole capital markets world, trading and buildings happening and developments and all those other things. This one's going to be different than the GFC. There's going to be some stress. There's going to be some stress in some really bad areas like office. But I also think like, if the story's good and the asset's good, you're still going to be able to get deals done.
Yeah, I totally agree. We're going to be buying about $1 billion in industrial in Texas and the Western U.S. over the next few years. That's just with our fund size.
You just said $1 billion.
$1 billion.
I love that.
So you cannot put all of that money out at the day that the bottom hits. Right?
That's right.
It is completely
impossible.
Well, real estate is not like a Bloomberg terminal where you just push a button and bam, you either sell the stock or you buy the stock on that exact day.
Yeah.
So you have to be thoughtful about when you're going to be investing those. You're going to have to be thoughtful about your allocation in states, your type of your rent roll, and your pacing. Yeah. And so we view that the buying window has emerged. We're not saying it's here and buy everything.
Sure.
But we are saying that there are pockets of distress. Yeah. There are opportunities to acquire. You brought up a project we bought in DFW within the last 30 days.
Yeah.
We have other projects in our pipeline. On average, we are buying something about every 6 weeks across our different platform.
Yeah.
And those are usually non-marketed deals or a very soft story where there's a reason why somebody has to transact. Yeah. Occasionally they are marketed deals, but to your point, if there's a good story, if there's economics behind it, if there's a really clear way to increase your rent roll or reposition a project, this is the time to be buying. There's less capital out there, so you're going to typically have better returns. And then the other thing that we think is very, very viable is the ability to have some land making, right? In certain markets where there's the land value has come off so much from market peak, and it's not going back to market peak pricing anytime soon. That's not what I'm saying. I'm just saying that there's an inherent value in some of these assets where you could acquire very high quality assets or land, and in 2 to 3 years start putting that into production, and you're going to be in a really good position.
Yep.
So those are the things that we're focused on.
Smart, man.
And the other thing that we're also now able to do is provide some JV capital.
Yeah.
We don't pretend to be the only group that has capital or that can see every deal, but we also remember how Caprock got started 15 years ago, where we had a few really smart people that were really trying to put together deals. And one of the things that we didn't have as much of was capital.
Yeah.
So using that same lens, we want to find out who are the really smart people today that might not be Caprock people, but might have their own company and don't have access to capital. And in certain spots, we can come alongside and provide them with capital.
Yeah, that's great.
Reposition buildings together. And so now Caprock continues to diversify from just being a sole operator and sponsor. Right, we've gone through a lot of evolutionary components where when we first started the company, we were partnering with PIMCOs and JP Morgans and Carlyles and groups like that to being able to raise our own funds and be having institutional capital behind us, to now having that as well as being able to provide capital to other partners. So it's been great for us to be able to have lots of different hats on and take advantage of the market dislocations.
So you hear it here first. Bring your deals to Jon. He's buying, baby. It's in the market.
We're in the market for the right deals at the right price.
That's right. Yeah. That's awesome, man. Learning just about that whole journey of Caprock. I want to dive in a little bit about kind of your back, the whole entrepreneurial journey. I mean, and it's because there's a lot of people love listening to these business podcasts. What's the biggest thing that you've learned from business that's made you a better person?
I would say the importance of resilience and grit, and being told no, and no, and no, and no, and being able to bounce back, and then also being able to look at things in different ways. Right? If all you have is a hammer, then everything you see is a nail, right? And you got to pound on it. But then you have to have a different viewpoint and say, well, if I'm not making a transaction, in this way, how do I change my lens? How do I reposition my story? How do I
be flexible?
Yeah. How do I have different ways to approach a problem? Because while all an investor or developer is a problem solver, right? You have. How do you convince a guy to sell at your price? How do you convince a jurisdiction that you need to build this building or change the zoning? All you have to do, you have to have empathy, and you have to have the ability to problem solve and listen to other people's problems and be able to hear that community feedback and take that into account and create a project that's going to be a win-win for the community. I'll give you an example of an asset in California where from the time we made our first offer to the time that the project was finished was 10 years. That's probably on one extreme, but that is, it was a really great city to work with, but it was very complicated. We had to do annexation. We had multiple parcels. We had, we were backed up to national forest. Like you have to be able to keep on fighting and fighting and fighting in order to, create the solution.
Yeah, that's right. Mm-hmm. Those are two great things. I mean, I just think in life, you better be persistent. You better understand that you're going to be told no a lot in this lifetime, and I think that's the tough thing for this generation of kids today. They've been patted on the butt and told how great they are forever. And then the first time they ever lose is when they get in the real world, right?
Exactly.
In the business world.
Having grit, right? Being able to get knocked down and come back up, right? What's the Mike Tyson quote? Everybody has a plan until they get punched in the face, right? It's like they punch in the mouth. Yeah, exactly. Yeah, you might have a great plan, and then you realize that's not going to work. And how do you adapt?
Yeah, no doubt about it. Most proud moment in business to date?
I think rather than most proud moment is like the biggest memory was still the very first deal that we had. Yeah. The rush that had of being able to successfully acquire a non-performing loan and being in the warehouse that weekend, literally sweeping it out and trying to reposition it. It was like a fixer-upper kind of like being on a TV show practically. That's the type of small building that it was, and you're in there fixing it up, and that's a memory that I'll always have. When did you think, at 29, you started the business. When did you think like, man, this is going to be successful? How long did it take to you where you were like, I think we're on something here? Did you know immediately? Tell me about that. I think Caprock has a long runway. I'm 44. I'm going to be doing this for 25 more years or whatever it might be, right? A long time.
Sure.
But one of the things that keeps me up at night literally is, you're only as good as your next deal, or you're only as good as how you see the market, and are you seeing the market correctly? Because the beautiful thing and the horrible thing about investing is you have a track record. So it's very transparent of how smart you might be or how you see the market and how you can get ahead of other people. And we have a great track record. We're very successful in that. But what keeps me up at night is saying, am I making the right decision today? Because just because Caprock has been successful for 15 years, we could be gone tomorrow. We could be literally like, I made poor investment choices, and the investor going to say, what were you doing? So every single investment decision is so important, especially in a turbulent market like this. So I don't think there's anything that says, how has Caprock made it or anything like that. It is, we have so much more in front of us. And in order to hit our full potential, each of our team members has to be working incredibly hard, especially in a market downturn, to separate ourselves from our competition.
I love that. Jon, we're going to close with what I call the C-suite closers. And these are just kind of quick hitting questions that people are just going to get to know you a little bit. And there'll probably be some good tidbits of information on here that you're going to share, and maybe they'll go out and do those things that might change their life, right? Let's just start high level. Favorite pastime and why?
Going to the beach.
Going to the beach.
Without a doubt.
Without a doubt.
When I was in high school and I was a senior, I'd get out at like 11:50 before lunch. And pretty much every afternoon I'd be at the beach and we'd be with friends or surfing. So that is always my favorite. Now I'm just waiting for Dallas to get a beach.
We'll probably make an artificial one here before long, right? There's something about the beach and I think it's like positive ions, right, that come off that water. Or is it maybe it's negative? Maybe it's negative. I can't remember.
Positive vibes.
But it's just good vibes, right? Of being hearing the waves crash, all that stuff. When have you ever been sitting on a beach and had a bad time? It's pretty tough.
Exactly. I was down in Costa Rica for spring break. I've only been there one time. I am a huge proponent of it because you have great Pacific Ocean, you have warm water, but then you also have wildlife. So I was sitting at the beach with my family, and we'd have monkeys going overhead.
Right,
right. All these wild animals going. It was so cool. It was like,
Did you get some surfing in?
I got some surfing in.
How was
Went to Witch's Rock, which if you know anything about surfing, that happens to be one of the top 10, 15 breaks in the world. And it was unbelievable. Yeah, it was insane. Overhead. It was offshore.
You got to show me some pictures of that.
It was really fun.
Something that most people don't know about you.
Most people don't know in the professional world that I played water polo and that I was captain of the junior national team, and we won a gold medal back in Cuba in '98.
Wow.
And that was fun.
That's pretty cool.
Yeah.
Most impactful book that you've ever read?
Not to be cliche, but definitely the Bible.
Love that.
I'm a Christian. It is an important fabric of Caprock, of who I am as a person, how we want to operate our business. So that.
Do you got a favorite chapter, verse?
I would say all the Gospels. Right? Matthew, Mark, Luke, John.
Okay.
But I mean, really the Bible, and it was also something that's been great about the Texas culture, and it is a very different environment than where I grew up, which I love.
Yeah. What does your morning routine look like?
I have 4 kids, so it is always hectic. I'm getting on the latter part of it, so it's 5th grade, 7th grade, 9th grade, and 11th grade. My morning routine is always about getting everybody out the door and getting them focused.
Yeah. Okay.
I want to say something way more exciting, but
man, I'm up at 4 a.m. I go run 2 miles.
No,
that's not you.
That is not me.
Yeah, I know. Yeah. Top podcasts you listen to, if any?
Well, other than this one.
Other than the C-suite.
Obviously, right? Oak Tree Insights.
Tree Insights.
Howard Marks, right? Every other week they come out with their viewpoint, and then once a month, I think it's Howard Marks comes out with his memo. I think that is one of the best podcasts out there.
Check that out, folks. Top 3 musicians or bands on your Spotify playlist. Let's hear them.
All right, so that's something that people don't know about me is that I used to be in a band.
Wow.
In high school.
What did you play?
I played the drums.
Okay.
I still play the drums. I love it, but I'm not very good at it. And I certainly can't be in a band these days. And I think that definitely helped with my lack of hearing.
Yeah.
But my songs are either country or classical. Those are if you get on my car, you have a 50-50 chance of listening to some country music or listening to Bach, Beethoven, and and classical music. Yep.
Interesting. Okay. If you could have coffee with one historical or famous figure, who would you choose?
Penny Noonan. She was
Penny Noonan.
Yeah, she is a contributor for the Wall Street Journal. She's also used to be Ronald Reagan's speechwriter or primary speechwriter.
Interesting.
And she has a column in the Wall Street Journal probably once a month, maybe twice a month. I think that she would be fascinating to sit down and see what she's experienced and talk to her about the last 40, 50 years in Washington and how U.S. has changed and the Reagan ideals and how far or how close we might be to achieving those. I think farther than closer, but that'll be a great conversation.
It's hard to believe a Republican actually took California.
He was also a governor.
Oh, I know.
Well before I was born, mind you. Yeah.
Wow. If you could live anywhere in the world, where would it be and why?
I do love Texas. So if I can say Texas, other than, I don't know, about July 1 to Labor Day, I think that would honestly be the case. And then my second choice is Idaho.
Idaho. What part?
Sun Valley, Ketchum area. Yeah. I've been going up there for 20 plus years.
Have you really?
And love skiing, love the mountains, fly fishing, mountain biking.
Yeah.
We moved around a little bit as my family, and that has always been
like the concept.
That has always been the roots. Is always going up to Idaho.
Sun Valley.
So before we moved to Texas, we would spend around 25% of the year up in Idaho. So it'd be like all winter. And I'd fly back and forth for business and do different things. But they'd be there skiing. And then in the summer, as much as possible, we'd be up there. So they're all good fly fishers. And they're great skiers and all that.
Yeah, that's awesome. Favorite thing about Texas or Dallas-Fort Worth so far? That could be a spot. That could be anything.
Open space.
Yeah.
There's no open space in Southern California.
Yeah.
There is open space throughout the Metroplex.
Yeah.
And yet there's still obviously a lot of people who live in the Metroplex. But if you drive most places in 30 minutes in a certain direction, you're going to get open space. And so just this week, I was looking out of our office window and there was a longhorn eating grass. And I thought that was hilarious because that is so different than what is in California.
Right. Yeah.
The trees in Texas are amazing.
Really?
Yeah.
I guess all the guys
shady oaks. All we have is palm trees. Yeah. The shady oaks that are in Texas are great.
I agree with you. I love areas that have, like, to me, Texas, like, you go another hour and a half east here and you turn into the Pines, which to me, the Pines are kind of like the South. To me, that's like Mississippi, Alabama, all that. To me, that doesn't feel like Texas. This kind of central region of the state where you have, the oaks and the mesquites and all those great trees. If you can find, where they're at, I think it's awesome.
Yeah, the Spanish oaks are incredible.
Yeah, it's incredible. Last thing we're going to close on is, I know you're also big on impacting others and giving back to different charities and such. And I'd love for you to tell a little bit about some of the charities that you guys are active with, and your passion in that space.
Oh, thanks, Conrad. So when we started Caprock, before we made a dime, we had the Caprock Giving Foundation, and kind of think of that as a company tithe, where before any partner takes any profit distribution, we're giving 10% to the Caprock Giving Foundation.
Yeah.
And the intent behind that, it was, we didn't know Caprock was going to be successful or not, but we knew that there was much more to success than just making $1. Yep. And so what is your impact going to be in the different realms, like the business realm, the community realm, the family realm? And so focusing specifically on the community realm and saying, how do we use business to impact others and to impact the community realm? We created that kind of essentially company tithe. And our mission is to invest in the communities in which Caprock invests.
Yeah.
And we're really focused on kids and families.
Yep.
And so that is something that's within a fabric of Caprock from the very, very beginning.
I think that's
and
awesome.
One of the things that we try and do is we'll come alongside nonprofits, and oftentimes they're Christian nonprofits, but we want to help them grow and implement the business plan, because I've served on various boards of nonprofits, and so has Pat Daniels and other people within Caprock. And what happens is that their donation base is very, very peaks and valleys, and it's super challenging for them to say, how much staff do I need? How am I going to be able to sustain that staff? How am I going to implement whatever direction that the charity wants? So what we have done is come alongside charities and say, all right, for 3 to 5 years, we're going to be with you as partners, and we're going to donate X amount every single year so that you can build up your staff and so that you can plan and be more effective, rather than just write a one-time check and go away. And then the more that we donate to those organizations, the more that we want to be involved in those organizations and be on the board and have visibility into what they're doing. Because at the end of the day, those organizations are going to make way more of an impact than anything that Caprock does about buying and repositioning a building or building a building.
Sure.
And what's our legacy going to be in the future? And I hope that people say, yeah, Caprock, they are great people. They're great team members. I can trust them. Yeah. But man, they really made an impact in these nonprofits and in our community. And that's where you spend a lot of our time and effort. That's awesome, man. That's so great to hear. I think that's just, at the end of the day, private corporations and people really are the backbone of making all of our cities and states better. You better not be leaning on the government to do that, especially in California, huh? I live in Texas now. That's right.
Jon, this was awesome, man. Thanks for taking the time to come over and sit down with me for a little bit. And I learned a lot about you today, and I look forward to doing it again sometime.
Great. Thanks, Conrad. Appreciate it.
Thanks, man.